Hey there, everybody. Ryan with Mission Insurance Group here, and I really wanted to just go over really quick, you know, an example of what sets us apart here at Mission Insurance Group from a lot of insurance companies. Most people are under the impression that insurance is insurance is insurance, and that just could not be further from the truth. So I'm going to give you a quick example here of a recent situation that we had with a client that we brought over to our agency. And, there's so many different options when it comes to coverage and deductibles and all these different things. And then obviously you have everything from your homeowner's insurance to your car insurance to possibly some business insurance, life insurance, power sports, boats, motorcycles, all those types of things. So I'm not going to get, way overly complicated into all those different facets of insurance, but I am going to talk really quickly about some really important home insurance concerns or issues that we see a lot. We review a lot of policies. That's one of the services that we offer at no cost is we will review anyone's insurance policy for them, whether they're a part of our agency or not, and and give some advisement on coverages and those types of things. So real quick, I'm just going to jump into the little presentation I put together here for you, which essentially goes into specifically wind and hail claims. And we're looking at this cost versus coverage approach. The biggest thing in the world of insurance is we can save you money. Everybody's telling you this. We can say make a phone call and in 15 minutes we'll save you 15%. And the reality is that cost and coverage are a bit of a trade-off when it comes to insurance typically. So there's not always a direct correlation, but often more times than not you're going to see that if you spend more, you get more. If you spend less, you get less. So what we do is we really try to search for the best bang for the buck. What is going to be the lowest cost and get you the best coverage. And essentially in the world of homeowners insurance, we're going to obviously look at things like the deductible. $1,000 is a pretty common homeowners deductible today. One of the coverage questions would be, is that all perils? Well, that's kind of confusing, but if you look at your policy documents, sometimes it's going to list whether this is an all perils coverage. And peril is the type of loss, so fire, wind, hail, earthquake, these types of things. So what we're seeing now is with most policies, they're going to be written on a split deductible. In other words, there's going to be one deductible for a certain number of losses, certain type of losses, and then there's going to be a separate deductible for other types of losses. So you're going to see this most commonly with earthquake, definitely seen a lot now with wind and hail coverage. So a lot of times these are going to be a percentage based, and percentage based means that they're going to take part of your insurance coverage on the dwelling or on the property. So if you have, for example, $250,000 of property coverage, and you have a 1% wind hail deductible, then as you can see here, you would have then a $2,500 wind hail deductible. So sometimes people will assume that their deductible is one amount, and when we get out the policy and review it with them, it turns out that they were unaware that certain losses would be at a different deductible. So this is a very important thing, and again, types of things that we look for here at Mission Insurance Group. So another big difference is going to be replacement cost versus actual cash value. And the term actual cash value sounds like it might be a good thing, but there's a significant difference between these two things. So in the example of homeowners insurance, if your limit of coverage on the dwelling again was say $250,000, that's the coverage on the dwelling, the property itself. There are some coverage options there, which would be 100% of that 250, and then there's increased options where you could go say to 125%, and then there's like a guaranteed cost that would have no cap on it, and so that type of coverage would essentially say it doesn't matter what this is going to cost to rebuild it the way that it was. If building materials take a drastic increase, if supply and demand changes, then no matter what the cost is, you're going to have a guaranteed replacement of that property, regardless of the actual coverage limit on the policy. So in direct competition with that would be the actual cash value version, in which these are going to be depreciated, not replaced with new. And a lot of times we're seeing this mostly apply to a roof. That's going to be the most common thing. So if you have an actual cash value on the roof, and if you have a loss on your roof and it needs repaired, then if your policy is written as an actual cash value for the roof, then they're going to depreciate it, and that's going to be a pretty big difference. I've kind of illustrated out an example here of how that works, but in this example, let's say that you had a $1,000 deductible on your property, but you had a 1% wind-hail deductible. We're going to use that same $2,500 example. And if you have an actual cash value policy on your roof and your roof damage replacement cost is $15,000, okay, on a 20-year life expectancy for the roof, if it happens to be 10 years old, then they're going to depreciate it by 50% because half of the life of the roof is already used up. So they're going to take the replacement cost of 15, they're going to subtract 50% of that, and then you're going to pay your deductible on top of that, and the insurance company is going to write a check for $5,000, leaving you the remaining $10,000 out of pocket. And, you know, this is one of these situations where we see insurance more often written that way because people are trying to get the lowest price, and so they don't realize the coverages that they're sacrificing for that price. So in this example, which we're seeing a lot of again on policies that we review, what I'm talking about is policies that we review that are outside of our agency. So when someone has a policy with a different company and they bring it to us to review it for them, this is going to be an example of one of the things that we're seeing more and more every single day. So here's a real client example. A client of ours who we had done a policy review for. They were insured with a different company, and this is a little higher value property. Their property coverage limit was $613,000. So in this example, they actually had, as you may be able to see here, they had, we get this right, going right, $1,000 deductible, which you'll see on this first line is actually what it shows. Deductible, other covered perils, $1,000. Okay, and by the way, I might add that they believed that $1,000 was what their homeowner's deductible was, but in reality, their wind-hail deductible was set at 1%. 1% of the dwelling coverage, which is $6,130. That's a significant difference from $1,000 to $6,000, especially when you are under the assumption that your deductible is only $1,000. So in turn, we were able to provide a quote for this client, and we actually provided increased dwelling coverage. So they went from the $613,000 to $658,000. So you know, a bump up in the amount of coverage that was offered. And that was all across the board with other structures and personal property. We did put a replacement cost on the contents coverage, so that was a significant difference as well in increasing their amount of coverage. And as you can see here, where they were paying $1,829 for what they did have, we were able to increase their coverage, lower their deductible all the way around, and save them money on top of that. So pretty significant difference. Now this same particular client, in fact, about 6 or 7 months later, after going 20 plus years without any type of claim on their homeowners insurance, happened to have a claim loss, and it was some damage that resulted in $10,694 in damage. So given their prior deductible amount, the insurance company would have written them a check for $4,564, and they would have been out of pocket for the remaining amount. Okay, since we were able to not only lower the premium amount that they were paying for insurance each year, but also fix their deductible into a more realistic scenario. Here is actually our claims report that we received, where this $10,000 less the $1,000 deductible. So they instead received a check for the $97.33, which is a pretty significant difference. You know, $6,130 difference. And so at the end of the day, the client saved $5,130, even though they were paying less for this policy that we were able to put them up. So obviously, a great thing, great, huge difference for the client. You know, one of the things that I would just encourage you to ask yourself for sure is, how long has it been since reviewing your current coverage? And, you know, really the best approach that we take is, let's look at coverage first and then price. You know, just to make sure, again, that you're aware of where those coverages are, the limits and the deductibles, and then look for the right price. But this is something that we do with our own clients on a regular basis, and again, something that we offer to those outside of our agency as well. You know, the other big difference that you may ask yourself is, do you have a trusted advisor or advocate, someone that really works on your behalf to make sure that you're getting the proper coverages at the best price? And when you do have a claims or any situation in which you need some, you know, an advisor role, is there someone available to you for that? Am I using a captive agency is something that, if you're not familiar with what a captive agency is, I certainly encourage you to watch our video on the difference between captive and independent agencies. There is a pretty big difference in what can be offered between those, and so if you're not familiar with that, I would definitely encourage you to check out our video on that. And then, of course, ask yourself, what life or financial changes have I had? So, you know, since you last reviewed your insurance coverage, has there been any changes? Obviously, things like putting in a swimming pool would be a significant change that could affect your insurance, your homeowner's insurance. So when we talk about auto insurance, adding teenage drivers, people, or even on the reverse side of that, having kids that move out, you know, that can be a drastic change too in lowering your premium. So we want to look at all of these types of things on a regular basis, because insurance should not be a static thing. It should not be a one and done. It's something that should be reviewed and looked at on a regular basis with a good advisor. And then obviously along the same lines would be, what life and financial changes might you expect coming up, because this again should be regularly reviewed. So just real quick on Mission Insurance Group and what we do. We tend to believe that we do things quite a different way. We are an independent agency, and so because of that, we offer choice through several different carriers. We are affiliated with many different companies, so that we have lots of options, both in coverage and price and service. So our approach, as we say, is simple. We give you the options, we make things easy, we save you money. Ultimately, our job is to give you the choices, not make the decision for you, but lay out the approach that we feel is going to, again, give you the most coverage for the least amount of money. So we take the time to do what's right. We do offer regular protection reviews for our clients. We're our one point of contact, in that we can handle all of your different types of insurance policies. And obviously we work as a claims advocacy on your behalf should you ever have a claim and really need someone to lean on. That's a big part of what we do as well. So I certainly appreciate you taking the time to watch this presentation here, and I know I made the screen go black here, but I'm hoping I can bring myself back. So I do thank you. I do hope that this was useful information for you. I'd love to hear your comments, questions, suggestions, any of those things. Feel free to leave them around. I would love to take a look. Thanks and have a wonderful day.